But what about the flows into markets like India? In the last couple of days, as China has come out with some, sweeping reforms for that government, many market experts are worried that the incremental flows might now move to China vis-à-vis India. Let's get an expert on that. Brandt, the Director of Research at EPFR Global, joins us on the line from Boston to talk about that. Cameron, thanks so much for joining us. What are the implications of the economic reforms that were announced by China on emerging markets? Will EMs in general attract more flows, or do you think China will now get a disproportionately higher share of flows?
I certainly think that the perception that China is going to pursue some fairly serious reforms is very positive for Asia ex-Japan equities in general. And even though last week was not a particularly good one for emerging markets equity funds, flows into Asia ex-Japan funds were essentially neutral, with fairly strong flows into dedicated China equity funds. I would say that the bulk of the flows into the China funds were local currency flows. So it appears to us that local investors believe the government is going to do some fairly serious work on the economy. Foreign investors are still sitting back a little and waiting to get a few more details before they move back in. But I certainly think that investors are hoping that the Chinese government will give them a reason to move back in, and if what is proposed appears credible to fund managers and investors here, that you should see significant amounts of money move in the next couple of months.
Okay. So what have been the trends with respect to equities in general, both equity and debt flows in emerging markets of late?
The trends are, frankly, tiptoeing would probably be the best way of putting it. There is definitely an awareness that after the summer, a lot of emerging markets equity and debt is again quite attractively valued. But those valuations are still based on QE3 in the U.S. going full bore. After the Fed did not announce any tapering in September, we were starting to see flows back into emerging markets, bond and equity funds regain some momentum, but that stumbled when the third quarter GDP numbers for the U.S. came out and were somewhat stronger than people expected. So the trend is that people are putting money into equities, but they're persisting with their year-long preference for developed markets. We have seen a shift within the developed markets away from the U.S., which was the hot market through the middle of the year, and also away from Japan, which had a very good run during the second and third quarters, towards Europe, with Europe equity and bond funds really the hottest of the regional groupings at the moment.
Cameron, hi, morning. Where does India stand in the pecking order in terms of foreign inflows into emerging markets?
The flows trend for India since the summer has been, a week on, a week off. I would categorize flows as essentially neutral. Some short-term money comes into India ETFs for a couple of weeks and then leaves. Obviously, India is a market that now that both investors and fund managers are paying more attention at the country level, has some asterisks about it. The current account deficit, the stubborn rate of inflation, the very slow unfolding of the country's reform story. And obviously India, I think, is at some risk of suffering if China's reforms are viewed as being credible.
Cameron, the other issue we keep discussing is the kind of money that comes into India. We've seen FIs buy about for 31 straight days. What kind of money is coming in? Do you think it's ETF money, it's short-term hot money, or is it money from long-only funds?
We track mutual fund flows, which are obviously not are a significant part of the portfolio capital story, but certainly not the whole part. And the FII data I think you're referring to includes things I think like certain classes of remittance flows, money coming in from sovereign wealth funds, hedge funds, and a number of groups that we don't track. I think the answer there is that there are certainly people who still see value in India. It is a market that I would say certainly investors in the U.S. Hope will do well whenever India does promise some reforms. We usually see significant amounts of money move towards it, but as you know, the problem tends to be the fairly slow pace at which those reforms can be delivered.
Okay, by the way, this market has yet again started to move higher now, so 6200 has been crossed again. It's been quite choppy, but a couple of these heavyweights like L&T, Bharti, etc. are making sure that the market stays above that 6200 level. Cameron, you track the mutual fund space. Have we seen increased incidence of money flowing into cyclicals over defensives?
As much as we sort of are able to break it down, it seems to be a focus on the blue chips. There are companies like Hindustani and Reliance, the big blue chip names are getting most of the attention. So it's less sector-based at the moment and more company-based. Companies that investors feel are fairly liquid are the ones that they're most interested in getting exposure to.
All right. Thanks so much, Cameron, for throwing light on where the flows will come from going ahead. China will get incremental flows if the reforms are credible. That's the word coming in from EPFR.